This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Saudi Arabia is expected to extend a voluntary oil output cut of 1 million barrels per day for another month to include September, 5 analysts said, to provide additional support for the oil market. In June, OPEC Plus agreed on a broad deal to limit oil supply into 2024, and Saudi Arabia pledged an additional voluntary cut for July. On July 3, Saudi Arabia said it would extend the cut for another month to include August, adding that it could be extended further. Oil prices have found some support from evidence of tightening supplies and economic stimulus in China. Brent crude was trading at over $84 a barrel on Friday, after hitting the highest level since April on Thursday.
Oil prices rose on Friday and notched a fifth straight week of gains as investors were optimistic that healthy demand and supply cuts will keep prices buoyant. Risk appetite in wider financial markets has been fueled by growing expectations that central banks such as the US Federal Reserve and European Central Bank are nearing the end of policy tightening campaigns, boosting the outlook for global growth and energy demand. Bolstered by supply cuts from the OPEC Plus alliance announced earlier this month, both oil benchmarks gained nearly 5% for the week, a fifth straight week of gains. The benchmarks are on track to gain over 13% for the month.
Moving on to the top news in the energy sector.
China's demand for petrol is likely to peak as early as next year as electric vehicle sales soar, several analysts say, bringing forward an energy transition milestone for the world's biggest polluter and a headache for global refiners. The International Energy Agency and consultancy Rystad Energy have brought forward forecasts of China's peak gasoline demand by about a year to 2024, while Chinese state majors PetroChina and Sinopec see it in 2025. The earlier halt in gasoline demand growth in the world's number 2 oil consumer will push Chinese refiners to ramp up exports of the motor fuel to Asia and spur them to make more naphtha, diesel and jet fuel, crimping refining margins in the region.
One of Europe's main markets for gasoline has shrunk, threatening to squeeze European refiners, after Nigeria removed fuel subsidies, which destroyed much of the country's domestic demand and a regional market for smuggled fuel. North America and West Africa, WAF, with Nigeria at the helm, historically have been the top 2 destinations for petrol exports from Europe, which produces more gasoline than it uses, meaning its refiners rely on exports to support profit margins. A steady decline in European refining margins in recent years, as competition from the Middle East, the United States and Asia grew, was reversed when fears of fuel supply shortages boosted profits after Russia's invasion of Ukraine. Next, we have the top news in metal markets. 5 European industry associations asked the London Metal Exchange, LME, to ignore calls to ban Russian aluminium from its system, they said in a joint statement on Friday, adding that such a move would damage smaller metal users in Europe. Earlier this month, Norwegian producer Norsk Hydro urged the LME to reconsider its decision not to ban Russian aluminium from its warehouse network. In a joint statement, the Federation of Aluminium Consumers in Europe, FACE, and 4 other groups said any restriction of Russian primary metal supplies would have a devastating impact on the EU aluminium industry value chain.
Saudi Arabia's latest flashy acquisition makes a certain degree of sense. The kingdom's $780 billion public investment fund and mining company Saudi Arabian Mining are buying 1/10 of $66 billion Brazilian miner Vale's base metals arm. The price is far from a bargain, but is logical given the geopolitical land grab taking place in critical minerals. Together with US investment firm Engine No. 1, the acquirers are paying $3.4 billion for a 13% equity stake in Vale Base Metals, which produces mostly nickel and copper. The implied enterprise value of $26 billion is 10.6 times the EBITDA that analysts expect the base metals arm will generate this year, according to Visible Alpha data.
We will now look at the top news in the agricultural sector.
The United Arab Emirates has banned rice exports and re-exports for 4 months, including rice of Indian origin, the state news agency WAM reported on Friday. The UAE, which imports 90% of its food, said the ban would cover rice of all varieties including brown rice, fully or partially milled rice and broken rice. Companies wishing to export or re-export rice must submit a request to the Ministry of Economy to obtain an export permit outside the country, WAM reported.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.